welcome to Frontier Opening Bell. I am Bosin Omofaye, and I welcome all of you warmly to this Wednesday edition of the program. Oreoluwa Odetunde, the head of macroeconomic analysis at Greenwich Merchant Bank. Thank you very much. Chima Okadike, who is in charge of consumer goods analysis at Betiva Capital Management. Thank you so much. And Ali Seger, in charge of risk at the CEO, managing partner at Seger Associates in Dubai. Thank you very much. Good morning, everyone. Welcome to the program. Let's take a very quick look at Africa's equities market roundup for yesterday in terms of the 5 exchanges that we cover. And you can see divergence in terms of the numbers from Nigeria's stock market gaining 0.65% comeback, led by the banking sector the day Nigeria announced its monetary policy decision to hold rates from previous level. Ivory Coast went down 0.59%. Egyptian stock market 1.03% positive. Kenya was down by 0.5%. South Africa took a run along with other emerging markets, 1.08%. The emerging markets were just where the news is right now, making a whole lot of gains. Of course, the U.S. stock market finished nicely on Tuesday. The Dow 30 finished above the 30,000 level for the first time ever. Let's touch on East Africa very quickly with the Kenya's Ministry of Agriculture saying that about 2.2 billion shillings have been disbursed for youths who are involved in agribusiness. Nigeria is pursuing the same agriculture business for youths with a whole new set of interventions announced under the COVID-19. And of course, during the recent, at the end of the recent youth protest against NSAS or police brutality, Kenya sugar outputs plus 37% in the 9 months, January to September this year. The central bank in Kenya says its reserves down to 7-month low, 867 billion shillings. The stock exchange in Nairobi yesterday unveiled a new digital academy. The whole idea is to allow stock market trading online by those who wants to do it. So you can just go on Nairobi Securities Exchange, check through the program models that are outlined there, and you can just go on and do a training on stock market. Very innovative way that we think other exchanges in Africa should just make possible to expand financial inclusion and get the knowledge of the market more ingrained in those who wants to lend them young or old. And Rwanda's finance minister has been talking about the country's level of debt sustainability, saying on Tuesday that the risk of default is now moderate from low. In other words, it's a little bit elevated, but still sustainable. So let's chew Nigeria's monetary policy meeting and the economic underpinnings. Let's go through that with 11.50% hold rate. The central bank chief was very tough on FX exchange rate, inflation, recession. Crude oil this morning at $48 plus, good for oil producing countries. Yesterday, President Buhari unveiled a 5,000 barrels per day modular refinery in Imo State. Good news, Eurobond. Cote d'Ivoire is floating the first Eurobond in sub-Saharan Africa this year. COVID-19 period is a 12-year paper. And ASEA has retained the CEO of the BRVM stock exchange as the chairman for ASEA for another term to pursue the Africa stock market linkage program that was started and expected to come on stream by the end of the first quarter, with EFDB funding that program by as much as $10 million US. Let me get Oreoluwa to come in through very quickly on Nigeria's MPC decisions and the macroeconomic underpinnings. Quickly.
Yes, so the monetary policy decision wasn't anything that was unexpected, being the way the economy has been so far, and that monetary policy has sort of it has been stretched out to a certain extent, 11.50%. just goes to show that there's not so much the central bank governor can do as regards cutting interest rates. So the other place it was looking at, and even highlighted yesterday, was disbursement of some of these interventions, some of the farmers and some of the real sector players, which is quite important to the level of development of the Nigerian economy. But certain things were said yesterday, and was more or less concerning. And if you look at the fact that he mentioned that inflation was expected to abate in December, like going by the end of the year. He also mentioned that some FX policies that we might seeing, it was just majorly due to speculators in the foreign exchange markets. And he also mentioned that by Q4 we're expected to just come out of a recession, and that was why he was plowing all of these resources into quickening the recovery of the Nigerian economy. So some of these factors we feel that are a little too bullish for the Nigerian economy. We're still having, he mentioned that yes, some of these funds were going to support more participation of baby farmers in the agricultural sector. But nothing was really addressed. The structural factors were not really addressed when he mentioned most of these things. If we're not going to see any improvement on that end, I really don't see how inflation can be expected to abate. And we're going into the end of the year where demand is supposed to so more or less heighten, because there'd be more it's the Utah season, there'll be more spending and things like that, so goods will definitely become more expensive. When we're moving towards the end of the year, so the level of security also is more or less threatened in a way. So we're still expecting some of these structural factors to keep affecting. So we do not expect that inflation would abate. And on looking at the recovery, we still expect that negative growth. Yes, it might slightly moderate. We saw 6.10% to 3.62%. I think we are projecting a growth of about 0.31% negative growth. Yes, it will moderate, but we're still expecting that level of domestic demand still remains relatively weak. Yes, some of this we're seeing a reopening of some of the economy. Everyone is going back to work. There's this normalization effect, but that hasn't just really been trickling down into the non-oil GDP aspect. We look at the oil GDP also. We're still expecting continued quotas from OPEC and its allies. So I think it was a little bit bullish on some of the statements he made yesterday. And if you're looking at FX too, it means significantly pressured. You're seeing that some of the suppliers are not even willing to come into the market to sell to the CBN. We're seeing spreads is being heightened. If you're looking at the parallel market rate and the INE FX rate, or even the CBN's official rate, there's that heightened level of spread between these two currencies. So it just goes to show that it is not even the rates that we're even currently seeing, that's not even reflective of what is currently being happening. So we're looking at the parallel market rates. We're seeing, I think what we're even seeing is that the cash rate is the one we're seeing at about 480. So if you're looking at the transfer rate at the parallel market, I think it's even entering about 500 to a dollar. So things are worsening. I think we just need to look at more sustainable policies for FX in the environment, because it's not going to get any better.
Interesting. Some of the conversations that we've listened to over the last several hours, again, since the recession, since the third quarter GDP came out over the weekend, was about some of the fundamentals. And that's what we're talking about, the underpinnings here. The underpinnings technically right now are way out of what the central bank can do as a finance manager, as it were. So this push it all back to the fiscal policies that will have to make sure that the inflow comes in which, how do we structure the economy? You talk about infrastructure. If you put in single-digit interest rate into agriculture and we don't fix infrastructure or fix insecurity, those single interest rates are not working. So the central bank can afford to sound, well, a bit optimistic, but then we need to hear from the finance minister here and the rest of the core economic managers on how we're going to fix this issue. We need FX inflow. significantly. I'm going to give Chima, let me just ask you very quickly to weigh in on the market side of this MPC. Then I have just one question with Ali Sega on some of these stories.
Thank you, Boston. So yesterday we saw that the market gained 0.65% after declining in the previous session. I don't think the investors are very optimistic regarding the MPC decision and statements made at the meeting yesterday. We still continue, although we still continue to see positive sentiments, we still think that it is really being influenced by the low yields in the fixed income market because alternatives are scarce, and so investors really have to find ways or places to fix their funds. I think that the investors really remain wary about the decisions made at the MPC. I think, like Arlo said, the MPC has become stretched thus far. They've been able to make a lot of adjustments to the MPR so far this year. And just at the last meeting, they reduced the MPR by about 100 bps. So I think they're now they're using a wait and see approach to see how that affects the economy so far. I think investors are also going to have to wait and see as well. But for how it affected the market, I think it was very muted. I don't think it affected the market in a very significant fashion.
Thank you, Chima. We'll get a few more specifics from you within the next couple of minutes. But let me ask Ali Sega, when you talk about risks that we are being factored in. This is Cote d'Ivoire moving into the global market to do a Eurobond at this particular time, 12-year paper. That's a very bold move.
Yes, it's a bold move, but I think it's necessary. You know, all these countries need to attract as much as investment as possible, and they need to go even on board movement and to do unusual stuff. In fact, we can say that all these countries, all African countries, are competing to attract the investment. So I think the one who will be bold will get the stuff at the end. This is really, we can say, interesting, you know. And I think the issue that we see mostly in North Africa, this is that they don't try to attract foreign investment, but they're more and more trying to attract domestic investment through Sukuk, so Islamic finance, through we can say going to market, to the local market. So they are trying also to attract the domestic investment. So I think this is this kind of bold move that they need to do. So they need to do bonds. They need to do as much as they can and to diversify their approach also.
Yes, diversify approach. So we're going to talk about that, Oreoluwa, in terms of, yes, we need foreign investments, but we also need to mobilize domestic investments. Thinking of how we're going to do that. But very quickly, let's look into Southern Africa, where the stock market was very strong yesterday, as we saw earlier, because emerging markets around the world were having a great time because of the risk-on sentiment that is now across because of the vaccine optimism, and of course the Joe Biden, the US-elect president, yesterday announced some key cabinet members, at least before the January 23rd formal takeover. Public Investment Corp, which is the big investment corporation in South Africa, says it will help Eskom to resolve its debt crisis. That's according to the finance minister, Tito Mboweni. Sasol, the energy company, is selling 50% of its interest in the U.S. chemical unit for $404 million. The whole idea is to pay down on Sasol's debt. And Angola is planning to privatize its state-owned oil companies between the end of next year and early 2021. For the vaccine for the virus, South Africa is paying $33 billion, roughly 500 million rand, to be part of the distribution of that vaccine, which the World Health Organization is leading. So when we talk about resolving debt and mobilizing capital, give me some thoughts that you think we can deploy here in Nigeria. It looks like domestic capital is becoming difficult to mobilize, aside the treasury bills and OMO auction in which everybody buys for whatever yield.
I mean, well, there's not there's not so much that can be done. I think the DMO has become quite comfortable with the liquidity that it's been getting, so it's not really even looking to borrow externally, bilateral either multilateral sources. Yes, we applied for some of these loans which we haven't gotten because we haven't put up this very growth boosting reforms into some of those sectors. So those fundings are still being a bit delayed on that end. But you also have to look at the fact that borrowing is just a one-off. Nigeria, we need that sustainable kind of funding, the sustainable kind of inflows into the economy. Eventually, borrowing will bottom out, would spend it, and what these funds are being spent on are not very sustainable aspects of the economy. If we're borrowing so much and your debt to GDP ratio rises, but these funds are being tailored to the productive sectors of the economy, that is fine, because eventually revenue would the capacity to earn would increase for some of those sectors, and it will have a multiplier effect, and we'll be able to pay down on these debts, and eventually we'll get out of it. But that is not what we're currently seeing in the Nigerian economy. So we're also having on one end that debt sustainability is a major issue for the Nigerian economy. So I think currently, especially for 2020, we have seen a lot of dampening effects on the Nigerian economy. COVID-19 came also and it really disrupted a lot of things that we were expecting that 2020 would change for the economy. So looking into 2021, we're expecting that if we see some of a major change maybe to the FX policies, yes, I think Goldman Sachs did release a report earlier, and it did mention how emerging markets are quite bullish for investors who are having this risk-on approach. So I will be on Ghana, I will be on Nigeria, I will be on India, especially looking into 2021, because the vaccine has come in now and there should be a normalization of activities by 2021. But if we do not create that environment where foreign investors can look into and can easily play into, I don't think we're expected to be a beneficiary of what Goldman Sachs expects. Will be bullish for emerging markets. I really don't see that happening.
Okay, Chima, do you agree with that? That the environment is where the key issues are right now in terms of the structural adjustments that need to get fixed?
I agree completely. I was having a discussion yesterday, and the topic that we're talking about was the finance minister's speech, when she said that they have structures or measures in place to help lift Nigeria out of recession. And the main things I saw there were funding for farmers, giving money and concessions to individuals. And my main objection to that was, I don't think we're seeing anything new. We've always been giving money to farmers for agriculture. We've always been giving money to people. There are a lot of poverty alleviation schemes around. But if you don't fix the main issues, the fundamentals that have led us to the recession at this point, then we're just really throwing money in the air. The main thing that happened is output is low. Why is output low? Of course, we are seeing that that happens in a lot of many other countries. We're not alone. It's a global pandemic and has affected many people in several degrees. But some people will be able to depend. So for us now, the way we'll be able to bounce back will now determine strong economies. So we can still see, we know that some economies will be able to bounce back after this recession. But for us in Nigeria, how feasible is that? So I think fixing the structural deficits in the economy, making infrastructure projects, enabling businesses to be able to perform properly without stress, without too high costs, so that they can compete positively with other, even imported products. We can then start to think about growing the economy, making exports, increasing FX, and all of that. But for now, I agree completely that we need to fix that first.
I agree with you very well. And one important point you made, what is new in what the finance minister said that the economic summit group, I listened to almost by everyone. I'm not sure I heard anything particularly new that would be a game changer. Like you said, we keep throwing money at everything. The central bank also spoke about throwing some more money at low interest rate to SMEs and what of that. So we keep throwing money left, right, and center, both at the fiscal and the monetary space, but no fundamental policy action, structural change that will help this money that we're throwing around to farmers and others to actually function. So the inefficiencies in the system is not making these various interventions come out very nicely, raise output, raise productivity. So which is a major problem that hasn't to be fixed and has to be fixed at the quote and unquote the political level up there. Like rightly put it, allow the economy to run on its own without being beholden to either the government or government policies or whatever, or government patronage and other inefficiencies in the system. I totally agree with you. I'm going to let the North African economy come into the conversation now. Let's look at the North African market, where the Egyptian Sawa capital gets the approval of the Financial Regulatory Authority to issue 2.5 billion Sukuk. Ali was just talking about domestic capital. Egypt is going towards Islamic finance. Talim Management Services is floating its shares on the market in 2021. Casablanca Aradei is listing its IPO via a capital increase and share buyback. And Morocco Stock Exchange was 0.87% yesterday. The ESG 10, 0.6%. Looks like a positive day in North Africa. Come back to you, Ali Sega, in terms of the various options for funding and how this will impact market and the economy.
Yes, it's quite interesting to see all this move in North Africa, because perhaps 20 years ago or 10 years ago, all these financial companies were government companies, to be honest. Most of the financial sector was government. So to see all these companies going private, going to raise funds to be better managed at the end, because when it's managed by the state, you can be sure that it's not managed, we can say, managed thoroughly. It's not a real management. Now it will give some transparency in the market. The companies will go to the market. They will need to publish figures, all these kind of things, to have good governance. We can say manner to all these changes are going on in North Africa, mostly in Morocco and Egypt. These two countries are starting to build, we can say, business ecosystem and a real capital market, because before you had just few companies listed on this market, and now we are seeing more and more companies going to this market. So it gives some option to the investor, to the domestic investor, to go and try into the market. After, to come back to the Islamic finance, it's a little bit different, in fact. So this is first, we can say, to raise funds on the domestic market, but it also enables this company not to raise debts as, we can say, a normal debt, like we can say a bank debt. So you will have more private investor going to Sukuk. So they will ask also this transparency. And to be honest, in Islamic finance, you have big gaps today. You don't have enough companies listed or going through Sukuk or through Islamic investment. So you have a lot of investors, but you don't have enough, we can say, investment vehicles. So all these companies going to Islamic finance, it's a very rational choice for them, because they know that they can have and they can raise a lot of funds quite easily and without even asking something, in fact.
Okay, thank you, Ali. Very interesting conversation. I think I want us to wrap up on today's show between Chima and Arelua very quickly on the issue of exchange rates. When we say what is the real exchange rate, for example, within the space, is some folks says it's the street or the black market rate. Some say, well, it is the NFX rate, is it the Bureau de Change rate, or is it the rate that the central bank officially put it? How does it really work in terms of exchange rate? Which is the real exchange rate when we say real exchange rate, separate from what you call the access rate? Or let's start with you.
Okay, yes. For real exchange rates, so what we're still being quoted for the CBN's official rates is what it's, just normally pegs the naira to the dollar rate. But if you're looking at the parallel market rates, a little more reflective of the Nigerian economy, of demand and, supply pressures. Yes, I think we earlier mentioned that, we're seeing supply constraints and demand has been, increasing over time. Yes, the central bank has come into the market and supplying some of these BDCs with the dollars from it, but it's still not sustainable for the kind of demand that we're currently seeing in the market. It's moving into the U-type season. There's a lot more demand and a lot more importers are looking towards, importing some of these essential inputs that will be used for production of some final goods and services, but that still remains a major havoc. So you're not getting supply from the official exchanges. You kind of have to go to the black market or the parallel market. Okay, so that one just looks a little more.
If you permit me to cut in there, is it possible for everyone? At what point do you think it's possible for the central bank, for example, to be able to feed everyone that needs an FX at whatever rate?
So yes, so I mean, we look at the factors of the negative factors impacting our external reserves. We know that officially we're managing is the managed float regime for the exchange rate. So the central bank has to be utilizing our external reserves to a certain level, in order to, keep the naira at a very sustainable rate, so it doesn't skyrocket, and we don't see this ripple effect on major parts of the economy, because we know that our economy is majorly import dependent. So, but if you look at the fact that the basket of our imports, basket of our exports, if you look at the fact that COVID-19 was a major havoc to the Nigerian economy, and the central bank cannot afford to let out some of these funds in the reserves, to investors who were looking to take out some of their money. So, we saw some artificial fixes to the reserves, trying to control demand. But the honest truth, you cannot really control demand at a certain level. It just goes to show there's so much disparity from the official exchange rate and the parallel market rate. So, until we start to see, maybe an improvement in the baskets of of our exports products, until we start to see more growth reforming policies, until we start to see maybe oil prices improving in the near term, to 2021, we might not get to see.
In a manner of speaking, it's a supply issue basically here, first and foremost.
Yeah.
Because you said it's a supply and demand. Chima, what's your take? She says, Ololu explained the demand side, and I got that. The supply side, because again, it looks like you can't give what you don't have. That's where we are right now with where the central bank position is.
Yeah, I think it is from both sides. I think it's affected by supply and demand. On the CBN side, they are trying to manage the reserves that they have, because money isn't coming in. We're not exporting enough oil. We're not exporting. Even when we try to export, even when we try to go beyond OPEC quota, we still have to deal with lower oil prices. So they have not a lot coming in, and they still have a backlog of demand trying to access the FX. So I think it is based on these two factors that we're seeing the parallel market trade as such. But I think I agree with Olua as well. I think we need to fix those structural issues, like we said earlier, that would help us to grow our business. We need to first to grow our businesses locally, cater to local demand, to help inflation and all that, and then look at exports as well. So until we are able to be self-sufficient in ourselves, we cannot really look to exports, except we're looking at things that were already individual things like oil that are already self-sufficient in. So I think it is creating those sustainable policies that can help grow our export base, to help shore up supply, and then creating also a suitable channel for disbursing FX to the people that need it, because you can't keep hoarding the supply. Granted, supply is limited, but then you can't still keep hoarding FX to those that need it to grow their businesses or to import and whatnot, because in the end, all that happens is we keep seeing that the FX rates at the markets or black markets continue to skyrocket, because people will continue to price in the worrying effects of short supply with great demand.
Yes, it's looking like a very tight rope for the authorities to walk here right now. It doesn't look really easy. Let's leave it there for today. Thank you so much. We appreciate your time. Ali Sega in Dubai from Sega and Associates, a managing partner. Thank you. Chima Ukadike from Vertiva Capital. Very insightful conversation with you, and your contributions, Sorolu Odetunde. Thank you so much. We appreciate it from Greenwich Merchant Bank. Have a great day, everyone. Thank you for your time with us here on Frontier Opening Bell. Thank you, and see you again tomorrow, Thursday. I am Boston Amafayo. Bye for now.